Week was one of those weeks for sure where preparation met opportunity, especially on Thursday when the market was falling as much as it did. However, our swings, they were moving up towards targets. I'll go into PG, WHR, Whirlpool, as well as our bonus one-day swing trade, AVGO. Hey everyone, welcome to Finesse Fridays. Welcome back. Welcome back everyone to Finesse Fridays. This is where I'll break down the swing trades for the week, the discipline, and the mindset behind the results. As you may not know, it's not about the percentage returns, it's all about the execution process. This week's lesson in general is rather simple, is let those trades work out for you. Let the market pay you. Oftentimes we find that traders, they cut winners too quickly rather than trusting in their actual plan and allowing price action to work out in their favor. This week's lesson was very simple. You get paid when you allow your winners to work. Oftentimes traders, they cut their winners too soon, especially when the option contracts start to move fast. This week in general was all about discipline, patience, as well as management. When I talk about patient pays, I'm specifically speaking about charts that look similar to PG, Procter & Gamble. Last week on Finesse Friday, I discussed PG's overall chart, the trend analysis, and today I'm going to discuss how it went to target 2 on Thursday. So patience and just allowing our remaining shares or contracts to actually hit target, all because it was a part of our trading plan. To PG, what I want you to notice is the trend in particular. From last week to this week, and this candle in particular, which is Thursday bar, hitting our final target area. This is where I'll just show you how we determine what is second target. Second target was all about where price last rejected. Whenever we enter into our swings, is all about having 2 targets at least. The first target is just to ensure that everyone is able to profit. And depending on the expiration dates, the first week's swing up was absolutely amazing, where those contracts moved between 200 to 300%. Target 2 in particular, we based it off of one of the last swing highs that's generally right around here, 162.47 to be exact. When I use my crosshair, you'll see exactly how that lines up when it comes to a prior support level as well as a previous resistance level. We never aim beyond our targets when it comes to understanding potential resistance, especially if we are buyers of the underlying security or buyers of the option, knowing that we're not playing with that much time on the contracts, mainly because we are technically swinging based off of current price action and capitalizing off of shorter duration movements. Holding PG's 152.50 calls that expired this week, meaning today being Friday, these calls were priced slightly under $200 a contract. And on this candle, which happens to be yesterday, Thursday, the contracts went as high as $1,057. When I break it down to our students for further understanding of exactly why the movements were accelerated based off of option Greeks, it provides them that aha moment as well as the insight into understanding option selection. Now let's get into the bonus trade, AVGO. Broadcom Inc., AVGO, I currently have it in bar replay mode. I would like you to get an understanding of what I was seeing. I loved the price action that occurred the prior week. I like the bounce off of support that happened on Wednesday's bar. I like the reclaim of the support level. And then I love price action on Friday as well as the closing price. My anticipation going into the new week, which was this week, was for a simple retest of the resistance we can see right around here. My range to exit was $350 to $352. That's based off of the underlying shares. So with my option contracts in general, when price hits that, we're staging left. The options in return, which you'll see, move between 150 to 230% based off of certain strike price as well as expiration date. I'll hit play, but before I do that, I'll break out my trend line. We're always trading in the direction of the trend, and I'll shorten it slightly. I want it to reflect the exit strategy. So this was the range, give or take. Top of the range was about 352. So 350 to 352 exit strategy. Monday occurs, our bull entry triggered, and we also exit the same day. So although this was based off of a swing trade analysis, it turned into a day trade. However, we still stuck to the original swing trading plan. I have a general rule. If my option contracts move over a certain percentage, I must take profit regardless. I can always reassess and reanalyze the chart. Monday, entry, as well as exit. As I point to this candle, you'll notice the high, 352.34. At one point, this ticker was up over 6% in general on the underlying shares. You already know how that translates when you're trading option contracts. We caught the exit strategy to the penny, give or take, and then we can see it struggled the rest of the week to the point where it eventually broke the trend line. No greed on our end. We followed the plan and we followed our rules. Next, WHR, official swing. Love the formation, and I'll back it out to the analysis originally of what did we see. Just like all prior swings so far on Finesse Friday, I want you to notice the commonality. So far, we've been trading to the upside. I understand this week alone, the market on Thursday had a huge down day. That's understandable. With our swings, they all navigated towards either second target or hitting our targets so we can be profitable and hold on to those gains. WHR, if we're looking at this overall chart, the overall picture, visually our eyes can see once price was downtrending. Now currently, if I were to connect a trend line, price is in a uptrend. I'll connect the trend line from here and I'll just swing it up. It'll look like this. If I were to back out into bar replay mode to take you back to the prior week, you'll understand that we were in a consolidation range. This range right here was key for a breakout formation. We bought on Monday, up we went, great percentage return. Tuesday, price held. And then Thursday, we hit a high of 94.82. Our second target was 95. Once again, we have general rules. As close to TP as possible, what really matters to us, how did those contracts move? With Whirlpool, the contracts were cheap, fairly inexpensive. The movement, well over 200%. No greed on our end. Wonderful swing. Looking at this chart as it is right now, it is still in a great formation. If you want to trade with this kind of structure, simply download the foundations. It's absolutely free. It's our framework. The link will be in the description. If you need a deeper insight, more in depth, that's what trainings are for. We're actually having a 2-day live intensive going down on February 22nd as well as the 23rd. That link will also be inside the description. So as you know, there's always one question. Did we finesse the markets this week, or did the markets finesse us? You already know we finesse the markets this week. Every one of those picks moved 300% each, not as a collective. And I'm very happy to say that. So the same question I'll ask you. What were your wins for the week? Drop it in the comments. Until next time, everyone have a great weekend, and I'll see you on the next Finesse Fridays.